So let's connect with our experts then, and let me welcome Nooresh Mirani on the show right now. Very good morning, Nooresh. What do you make of this gap down opening indication for GIFT Nifty? Because just yesterday we were actually able to defend that 22,000 mark. Do you believe that this dip could once again be bought into?
So I would expect some bit of a recovery in the day itself. Yesterday, what we saw is a lot of volatility in the US markets. They've corrected and the futures are up a little bit. But if you look at the dollar index, it has finally taken a drop below 106. That should act as a positive. Brent crude now is closer to 70. And we are trying to form that base around 21,800, 22,000. And we closed around 21,800 on the day of elections where there was massive volatility the last time. So for now, could be getting into a range and sustaining about 22,300 would be a first indication of a short-term bottom being in place.
Right. Interesting. Nooresh, so what is it that you're making right now of what the broader markets will do? The fact that we, recorded the longest selling streak since 1996, that's what we're sitting on. We're staring at a sixth month of consecutive losses. What's that telling you about, the texture of the market, how the next month is going to pan out? And, given all the uncertainty in global markets, does it seem like we should steer clear from some of those globally exposed sectors, and namely IT?
So I would say, given that we've had 5 months of negative returns, even if it becomes 6, the fact is we've already corrected a lot on the broader markets. The Nifty does not show the true picture. If we look at from 52-week high, roughly 50% of the stocks are down 40% or more. So that itself is one of the most oversold readings we've seen from, say, 2020 or even in 2018-19. Or going back also, RSI is at 22 odd levels, which is again the lowest. So this actually creates a case for a bounce back. And over the next 1 month, we should see a lot of this tariffs volatility to get over, and we get into a consolidation phase, making a base for the next trend. So for now, expecting it to form a base rather than seeing much more corrections.
Interesting. So Nooresh, what stock ideas would you recommend this morning?
So one first would be a buy on PFC. That's a stock which has corrected more than 30% from the top, trying to form a base around this 360, 370 mark. Yesterday, tried to give a recovery move. Would expect a quick bounce back today towards 400 plus levels, stop loss at 375. Second would be a buy on Indigo. This is clearly a relative outperformer, short-term breakout done. Crude at lower end of the range makes it a positive bet. So, and the stock is not corrected with the markets as such. And yesterday closed above the 4550, 4600 mark. So a breakout done here, I would expect it to again go back to previous all-time highs. Stop loss at 4500, target price of 5000.
All right, good to know that given the bit of a nervousness in the market, 2 buy calls coming in from Nooresh. Let's watch out for those. But with this, let's also welcome Kunal. Both are on the show right now. Hi, Kunal. Good morning. First up, help us with your stock picks. Which are the stocks that you're eyeing this morning?
So, Srishti, I'll go with two buy calls. The first one, and my focus is more on financials. So, the first one which I would suggest would be a buy on Shriram Finance, a very interesting chart. The stock has been relatively very strong in the last 1 month, trading above its 200 moving average as well as the short-term moving average of 50 EMA. And more importantly, I think the stock confirming a swing breakout on multiple time frame basis, whether it's daily, intraday charts, even on the weekly time frame. So that makes the prospects very attractive for Shriram Finance over the near term. Would suggest a buy with a target of 655, stop loss to be kept at 620. And from the banking names, yesterday, one of the other private sector banking stocks, of course, the mid-cap names, which started to show signs of a breakout, was Bandhan Bank. The stock looked extremely strong. There was a very strong breakout in the charts over the very near term. And then the stock is potentially also nearing a 50 DMA breakout, which I believe could change the trend for the stock on a medium-term basis also. So 150 to 155 range is a target for Bandhan Bank, stop loss at 139.
If you like this video, then like, share and subscribe to ET Now.